We've been talking a lot about headwinds. I'm going to bring in someone a little bit more optimistic. Our next guest maintains her Outperform rating on the stock. Joining us now is Helane Becker, Cowen Senior Research Analyst. Helane, I want to just open broad here and just get your overall thoughts on the print from FedEx, maybe why you think the stock is trading lower right now and any positive sort of threads you're still seeing within that print.
Yeah, thanks for the question. So our view is kind of interesting, right? You mentioned we have an outperform rating on the stock. As I was listening to the conference call and their, in general, optimism about the company itself, and I was watching the stock trade down in aftermarkets trading and knew it would open down this morning. I was thinking to myself, am I listening to the right conference call? Because they were talking about how aggressively they're working to cut costs. And for them, and this is the reason for our optimism, for them, it's really about a multi-year program to get costs down, to shift away from the old narrative of operate independently but compete collectively, and rather focus on bringing operations together, get rid of facilities that are underutilized that they don't need, restructure the entire fleet operation and the way they operate the day sort and the night sort, and use less aircraft to get the job done as shippers what is the right word, downgrade from high-priced alternatives like air to lower-priced alternatives like ground. And instead of having an express truck or van in your neighborhood, and then an hour or so later have a ground van in your neighborhood, kind of combine them and lower costs that way. So our view is multi-year, which I think is important because, to your points, which are very correct in our view, is that we're going to see a really tough first half, calendar half of 24. And that obviously coincides with the second half of their fiscal year.
What's your read through to the consumer based on what we heard from FedEx last night on the call?
Yeah, well, it would seem that there's a shift going on, right? Retailers are encouraging shoppers to visit their brick and mortar stores, whether it's buy online, pick up in store, or just go to the store for deals. So we think there's that shift going on, but to your point, everything we've heard is that the consumer is spending less and slowing down. And we were expecting an okay peak season, but not a great peak season, as people have shifted to more experiences with their families rather than just buying lots of stuff that go in a cupboard after a day or three and don't get taken out again.
And so, Helane, sort of zooming out on that and thinking about what it might mean for, is this demand going to other competitors or is it just going away in period when we think about consumers and, is UPS getting part of that business or is Amazon getting part of that business in the holiday season? How are you sort of reading that? Where is the business going or is there just less business to be had?
I think there's less business to be had. I think that's part of the answer. FedEx said in response to questions that they picked up about 400,000 packages a day on average from the UPS threatened strike earlier this year, and that they've kept a big percentage of that. They feel as though they've also kept a percentage of the yellow freight capacity that they pay, or volume rather, that they picked up. So they think they've picked up both, but and they haven't lost any. But there's always share shift between the companies, right? UPS and FedEx tend to trade accounts. There are a lot of shippers that don't want to rely on just one provider. They like to rely on both FedEx and UPS to keep pricing honest and to keep it from getting out of control. Because remember, both these companies raise rates to shippers every January between the low end, roughly 4.5%, 5%, and at the high end, as much as 7%. So you're seeing rates go up, and that also causes people to shift demand away from next day to later in the day or 2 or 3 day delivery. So that's part of it. And there are some, as I said before, there are some shippers that will move capacity or volume between the two main providers, just because whoever has the better opportunity to get the packages there faster,
Right.
is really where you want to go.
Helane, you had mentioned the consumer shift earlier into purchasing on experiences as well. And thinking about that, of course, this is a jolly time of year, people traveling to see family and whatnot. You know, at the end of the day, we had been getting more updates from TSA, which I believe tomorrow kicks off its official kind of holiday, well, not holiday, but their kind of peak season as they track it. They expect this holiday season to be the busiest ever. 2023 already seeing 7 of the top 10 busiest travel days in TSA's history. I believe Delta's your top pick for 2024. Where do you believe the kind of overflow or the permeation of this experiential travel mindset from consumers could prevail in 2024?
Yeah, so remember, part of what's going on is the economy is just so much bigger than it was in 2019. And so on that basis, people would travel more. And from our perspective, here's what we think is going to happen next year. We're going to see pretty good domestic recovery, in part because airlines are taking capacity out of the domestic market. We think international will continue to be strong with more of a focus on the Pacific than on the Atlantic. I think everybody, air quotes around that, went to Italy last summer. Not sure they're going to go back this summer, but we do see United and Delta, which United was our best idea for this year, and Delta, as you point out, for next. We see them restoring seasonal capacity. We don't see them adding more than the industry average in the Atlantic. In the Atlantic, we see capacity growing almost 9%. And that's what happened in the domestic market, by the way, this year. And we saw the domestic focused airlines lose money. Now, we're obviously not forecasting money that the guys will lose money in the Atlantic next summer. We think it's going to be another strong summer. We just don't think that pricing is going to match what we saw last year when, I don't know, the route that we always check, one of the routes we check, New York to London, New York to Paris. During the Paris Air Show, it was as much as $8,000 to $13,000 to fly business class between New York and Paris. And now, if you look at that, it's closer to $3,000, which seems to be more normal and more maybe agreeable. Like people will pay $3,000, but they're not going to pay $13,000.
Right. Yeah, no, I would definitely be asking to borrow your corporate card for that purchase, Helane. Certainly appreciate.
Certainly, yeah, I think the boss would reject that idea too.
Look, I don't think any of us are getting that approval to go through. Helane Becker, TD Cowen, Senior Research Analyst. Always great to speak with you. Happy holidays, Helane.
You too. Thanks.
Thanks.